And in Asia, stocks fell today amid fresh trade concerns, with the U.S. announcing it's set to slap tariffs on European Union goods. The Nikkei 225 in Japan fell 2.01%, closing at 21,341.74, and the Topix also slipped 1.72% to finish its trading day at 1,568.87. In Australia, the ASX 200 dropped 2.21%, closing at 6,493 as most sectors saw declines. In Hong Kong, the Hang Seng Index bucked the overall trend regionally as it rose 0.26% to 26,110.31. Markets in China and South Korea were closed on Thursday for holidays. U.S. stock index futures indicated a higher open on Wall Street this morning at around 3:55 a.m. the Eastern Time. Dow futures were trading 111 points higher and indicated a positive open of more than 50 points. S&P 500 and Nasdaq futures also pointed towards higher implied opens. Wall Street is seeking to recover from an 800-point plunge over the last two sessions, with the Dow Jones Industrial Average closing down 494.42 points on Wednesday as investors struck fears of an economic recession. Well, let's flesh up this story for you now. We mentioned earlier that the Trump administration will impose tariffs on $7.5 billion worth of European imports from October the 18th. Now, this is in retaliation against the illegal European Union subsidies for aviation giant Airbus. The administration received a green light for its latest import taxes from the World Trade Organization, and the EU's top trade official says the bloc will prefer to reach a settlement with the United States to avoid a tariff war, but that it will respond if Trump imposes new duties on EU products. More stories now, and growth in the United Arab Emirates non-oil private sector slowed to a 9-year low in September, with manufacturing and services falling slightly to 51.1 from 51.6 in August. Although the non-oil sector remained in growth territory, September's reading is the UAE's weakest growth rate since May 2010. New orders were at the softest they have been since the survey began more than 10 years ago, demonstrating weak demand in the country's non-oil economy. The UAE, which has the most diversified economy in the region, raised its expectations for economic growth in 2019 to 2.4% last month, driven by faster growth in the oil sector after lowering them earlier this year. Still talking PMI numbers, but this time in South Africa, where private sector activity contracted for a fifth consecutive month in September to 49.2 from 49.7 in August. Firms saw an extension of the decline in new orders during September, recording a 15th successive monthly fall in total demand. An economist says the headline PMI signals a further deterioration in the health of the private sector economy following attacks on some businesses in September. Well, it's a different story in Kenya, where the private sector activity grew for the fifth straight month in September, boosted by an increase in new orders for businesses. The market's Stanbic Bank Kenya PMI index rose to 54.1 in September from 52.9 the previous month. Analysts say private sector activity is showing signs of momentum, although panelists continue to highlight cash flow issues that they face. Away from PMI, now, the Central Bank of Zimbabwe has announced plans to put the first notes of its reintroduced currency into circulation in November. Zimbabwe has been chronically short of paper cash, forcing most transactions onto electronic platforms such as mobile money system EcoCash. The new notes are expected to help reduce the queues at the banks and provide the people with adequate money for daily use. The Zimbabwe dollar was reintroduced in June in electronic form after being abolished in 2009 following a bout of hyperinflation. And the Zambian government plans to obtain almost 10% of the Southern African nation's total income next year from undisclosed sources, raising concerns about the accuracy and sustainability of government spending plans for 2020. Now, the budget presented by Finance Minister Walya Ngandu in September contains $515 million of exceptional revenue that could further stretch the finances of Africa's second biggest copper producer if it doesn't materialize. Government debt has surged from 20% of the GDP to a decade ago to a projected 91.6% this year, prompting the International Monetary Fund to warn that Zambia is at risk of debt distress. Zambia plans to spend 106 billion kwacha according to the 2020 budget, and that's a 22% increase from this year.